We start with a chat on the crude prices, which continue to remain near that $112 per barrel mark for the second day. The crude prices were supported by brighter outlook for the global economy. Appetite for riskier assets got a boost from the Bank of Japan's plan to shore up the Japanese economy. Meanwhile, the strong investor confidence data from Germany, along with the hopes of US extending its debt limit to May, also led to an upside in the prices. Very flat moves coming into the European markets right now, though. Meanwhile, the gold prices are trading near one-month highs as confidence among the investors got a boost from the easy money policy of central banks. A strengthening global economic recovery is also expected to make riskier assets more attractive. Recent upbeat data from around the world has triggered a rally in equities and precious metals, with industrial applications including silver, platinum and palladium are putting gold in the shadow. Gold on your screens very flat yet again. 1690 though is holding in that space. After the government decided to link gold ETFs and gold deposit schemes, SEBI is looking now to relax minimum requirement of underlying gold for gold ETFs. As per sources, 20% underlying gold may find way into bank deposit scheme, and SEBI may also relax the minimum holding requirements in the market. Chirag Mehta, fund manager, Commodity Quantum Gold Asset Management, is joining us on a phone line from Mumbai to make further sense on this. Chirag, hi, welcome. How would you look at 20% of this being linked into the gold deposit schemes, and how would that really impact the ETFs?
Manisha, we need to see the fine print before we comment much on it. But from a prima facie, if you look at it, gold deposit schemes would have a lock-in period, and it's been lowered from 3 years to 6 months. Gold ETFs has been open-ended fund, so in a hypothetical case, entire gold can come for redemptions. So in that case, we will run short of gold or the underlying in that case. Secondly, investors participate in gold because gold is an asset which doesn't have a counterparty risk exposure. When you do a lending business, it does entail a counterparty risk, may it be banks or any other financial institution. So from that perspective, again, whether investors would like to go ahead and take on the counterparty exposure for a minimal interest payment that they'll receive, it's yet to be seen whether they'll like to go for that or not. So these are the two hindrances that I see which needs to be worked out, and the blueprint or the fine print needs to be seen before commenting further on that.
Absolutely, Chirag. These are all source-based information that are coming into the market. The SEBI notification, of course, would come in a couple of weeks. But how would you look at if the norms, as of now, of course, 90% of the gold ETF assets need to be backed by gold. That could be eased off. Do you think that's a good move coming in for them?
See, gold ETFs have become popular because they are as good as gold. Now, a little bit of backing of physical gold being transformed into a lending may not be taken well by the investors. That will lose the charm of gold ETFs being as good as gold. So we need to gather more feedback from the investors, and we also need to see how the regulations shape up before getting into it.
Your point is well taken, Chirag. Thank you so much for joining us. So, of course, as of now, the industry is awaiting the fine print on this one. But as he said, most of the people who go for gold ETFs go with the sense that you would be looking, or it is backed by actual physical gold lying with the mutual funds. Let's take it to the experts then. And joining us in studio is Deepan Shah. He's business head of broking, Staven.com. Also joining us is Vijay Bambani. He's author and CEO, BSPLindia.com. Deepan, hi, let's start with you. What's your sense coming in for the precious metals? We've seen good gains coming in, but 1690 thereabout is how it's holding now.
Yes, absolutely. We could see it the other way around also, that 1690 is acting as a very strong support in the international market, and as long as 1675, 1680 is held in the international market, we could see some upswing coming in gold prices in the Indian markets also. And today evening we could expect some rebound coming in the prices in the evening session.
Deepan, what's your sense coming in for silver? Because that seems to be doing better than gold, and platinum, of course, seems to be doing better than silver as well. So do you think there's a pattern change in people's buying habit right here?
Yeah, see, in terms of, if you see the volatility also, we could expect that silver could actually outperform gold in terms of volatility also, and in terms of relative strength also. And it has been the case for the last 1 year now, that everyone is expecting to, silver outperform gold in terms of prices also. Thus, we could see that silver could give a better return in terms of vis-a-vis gold in terms of percentage rise.
Vijay, what's your sense coming in for the crude prices? Because the strength in this sector really has been on the higher side. We've seen a gradual increase coming in, but higher highs, almost $97 on NYMEX now.
You're right, Manisha, and on the MCX correspondingly, I was talking about 5180 to 5200 being a resistance. We are now trading above 5200 for a while now, and that's a positive indicator. My guess is buying is being seen to the system at this point in time, and should we cross 5220, the buying can only accelerate. So as of now, the base for the very short term will become 5160 odd levels, and on the upsides, once we cross 5220 with higher volumes and open interest expansion, the possibility of 5260 to 5280 should not be ruled out.
Deepan, what's your sense for natural gas prices? Because the strength continues in that as well, but do you think it's short-lived in that sense?
Yeah, not short-lived exactly, but we could say that it is kind of overstretched in terms of the prices rise that we've seen, and we saw some minor profit booking yesterday in the late evening session, and that could be repeated today also. Thus, we are seeing that some kind of base building could be actually built around 185, 186 levels. Thus, any rises in the natural gas prices at around 105 could be used by experienced traders for shorting it, and we could expect some 191 to 187 levels in a couple of days to come.
Vijay, coming to base metals, then the data in the recent days has been positive. The China buying, of course, is a bit of a hindrance. That has been quite limited. But with the data, the kind of levels that have been coming in, do you think it's quite supportive as we go ahead for this sector?
Manisha, yesterday I talked about certain levels being overcome for me to start buying into base metals, and those levels are almost here. So I would basically start with lead, which is showing a good degree of buying support coming in here. I would want to buy lead futures in the January series at 126 and a quarter. I would hold these long positions with a stop loss at 125 and a half, and I would expect to book profits close to 127 and a quarter, if not higher. And the other one is zinc, which is showing a good deal of broader market strength compared to the broader markets. Here again in the January future series, I would buy it at 111.25 levels. I would hold these long positions with a stop loss at 110 and a quarter. My immediate target would be 112, although I do expect zinc to go past 112 also, but at least part profit booking, if not all, is warranted at 112 in the absolute near term.